Before Calla, we have a wreck in the center lane there.
Of the staff,
Here we go,
management,
kids.
or ownership of this station.
It's time to get on the right path with Right Path Real Estate.
Yeah, it's time to get on that
Jason
right
Byble.
path.
Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome. Boy, that's awfully quiet. Oh, maybe I can turn my mic up. Oh, here we go. Oh, that's better. Thank you.
Okay, you're welcome.
Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817.
Sound excited.
I'm excited.
I'm
excited.
10271. Now here's your host, Jason
Hot
Byble.
mics.
Welcome to the show. Welcome to the show, Jason Byble, Right Path Real Estate. 713-785-1817. Facebook.com/Right Path Real Estate. It's Friday, and we have Chamber of Commerce weather here in Houston, which means that it's less than 100% humidity. That's nice. And it looks like it's pretty cool. Get into the 60s. I think it might get into 70s today. It's going to be super, super nice. So we are celebrating that with a trip to the Sugarland Flying Saucer at 3 p.m. today. So if you guys are around, you are welcome to come on down to Sugarland Flying Saucer. 3 p.m. There'll be a couple of us there hanging out, enjoying the weather, sharing some real estate war stories, which is always fun. Today I want to talk about regret. Yes, the big R. It's one human emotion that is a difficult one to fix. Regret. And I can tell you the things that I've always regretted in my life were the things that I never did or I took too long to do. For example, I should have gotten into real estate sooner. I should have gotten into real estate way sooner. I had some interest coming out of college. My wife and I were RAs. We were resident assistants in college. That's what introduced us to the business side of real estate. So we were RAs. We were, for those of you who are a little bit older, you heard the term dorm moms. So we had, when you first start as an RA, you have a whole floor, and you kind of manage all the kids on that floor. And it's really for basic stuff, you need help with finding classes, and something happens in the middle of the night, all that kind of stuff. And then we got promoted to house managers. We had these little houses on our campus, had anywhere between 36 and 50 residents in them. So then you get promoted, you get paid a little bit more money, and you run these houses. Then you get promoted again, and most folks didn't make it to this level. Most of them were RAs. I think we had 100 or so RAs across campus and small house managers. Then you get promoted to assistant hall director. And what's interesting about the hall director gig is now you're managing RAs who manage an entire building or multiple buildings. So at that point, you're like an apartment manager. And I got introduced to the business on that side when I became a hall director, assistant hall director. And it was a fantastic step into real estate. And I always thought, man, this would be kind of cool to own one of these big old apartment buildings. How do you do that? And unfortunately, life got in the way. I exited college, graduated, went to work. While I was at work, did 2 graduate degrees in the evening, and then just kept working. And real estate was always kind of on the back of my mind, but I never really took it seriously. I never executed on the opportunity. I graduated in 2001, and just to think, if I had taken those last 15 years, or 12 or 13 years before I started Houston House Buyers, if I had just bought a house or two a year at 2002 and later prices, I mean, that would have been a fantastic time to get into real estate and to continue to be in real estate. So one of the things I've always regretted is not executing on opportunities soon enough. You hear a lot of people will tell you, oh man, I would have loved to have been at Google when they're only like 100 employees. Yeah, but what you think Google is now and what they were 15 years ago, 20 years ago, much like Apple, is a completely different company. I mean, that's one of the things I find really fascinating about our companies. So our oldest company, Houston House Buyers, is 4.5 years old. And our second oldest company is like 3 years old. Right Path will be 2 years in February. We are very much a startup. We're still in startup mode. And sometimes our staff gets frustrated, like, oh my gosh, all this stuff is changing. It's like every day something new, and this is crazy. Like nothing's static. Every day's a different day. And I always tell people, I'm like, hey, you told me in the interview you wanted to work for a startup. Congrats. You're working for a startup. Every day is different, and it's kind of a total mess. At least for the staff side. I think the customer side, they don't really notice it. But on the staff side, we're always changing stuff. And that's because we're executing on opportunities. But when people tell me, oh, I would always love to work for a startup. We've had people come into our office that have interviewed, and we've gone through, hey, these are the challenges we're dealing with. Here's this, here's that, all that. And they're like, oh my gosh, I don't know if I really want to work for a startup. It's like, yeah, it's a Wild West over here, right? Startup companies are, that, let's say you work for a oil and gas company that's 100 years old. You've got an HR manual that's been tested for decades, right? You've got your employee handbook that's decades old. You've got all these rules and regulations, and in fact, you have institutional knowledge. You've got a culture. When you're starting a business, there is none of that. And you don't realize how much of that is instilled in the company. How much informal training happens just based on cultural norms and the environment that they're in that company, the institutional knowledge. Well, there's none of that in a startup. So I always get a kick out of people when they say, oh, Jason, I always want to work at a startup, because that's where all the money's made. And they're right. That's where the startup is where it's at. The startup it's really the growth. It's the startup and the growth. We've got a fourth company that is going to be, the fourth company is really is going to dwarf a lot of the things that we're doing. It's going to take probably a decade, if I were to guess. But it has the potential to be larger than our real estate businesses, in part because it's financial education and tools. So that's just a bigger market than real estate. And when I present this opportunity to folks, they go, I don't know. It's just, a lot of things are changing, and it's a startup, man. It's a startup. What do you think? In fact, if you guys remember back to Apple had 3 founders, right? Wozniak, Jobs, and another guy nobody can remember. And that other guy nobody could remember, I think he invested, I don't know, $5,000, $10,000 into Apple. I gotta Google and pull him up. Somebody on the Facebook feed, Google this guy up. He's the third founder of Apple. Cannot remember his name to save my life. But Google him up and drop him in the comments section. But third guy out at Google, or not Google, I'm sorry, Apple. Third guy at Apple, he invested $10,000, $15,000, $20,000, whatever the number was, which was a lot of money back in the, late 70s, early 80s. But if you look, the guy pulled out a year into it. Oh no, this is too risky, man. I need my money back. And you're like, of course, everyone laughs at it now, but most startups don't make it. One of the things we talk about, we used to start the weekend retreat out like this. We'd say, hey, 97% of real estate investors fail. And everyone would go, whoa. And then I'd say, now let's talk about why that is so that doesn't happen in your business. But you look at an Apple in startup mode, working in the garage. I'd have to see how many years they spent working in the garage. The working in a garage, it looks great on TV, and they flashed through it really quick. Oh, everyone put his name up there. Ronald Wayne. So Ronald Wayne, there used to be he was the third founder at Apple. Somebody had sat down. If you guys want to Google this for me while I'm up here on the radio show, how much would he be worth today if he had held his stake in Apple? It's a ridiculous amount of money. So Ronald Wayne jumped out way too soon. The guy would be worth billions. I know that, at least. When I was flying on the way back from Seattle day before yesterday, they were running like wall-to-wall coverage on Apple. They hit a $900 billion valuation, their our market cap. And so there's a race to $1 trillion, and who's going to make it first? So, there we go. Eric Brown just posted, Ronald Wayne, if he had left his initial investment in Apple and did nothing else, just left his capital there, he'd be worth $35 billion. Now,
1 minute.
that doesn't mean when Ronald was there in those early stages that wasn't scary. There was a lot of scary stuff going on at Apple for decades. I mean, this is until the iPhone really came. I mean, you really look at it, the iPod and the iPhone really saved Apple. But it's he sold his shares for $800. There you go. Sold his shares for $800. The company's worth he would be worth $35 billion today. And that's not to say that he wouldn't have bought more shares, gotten more controlling interest in Apple, or invested in other ventures earlier on. There's something to be said about those who stick through the bumpy times. And that all has to do with today's theme, regret. When we get back from the break, we're going to talk more about how to build income and wealth with real estate. It's Jason Bible, Right Path Real Estate.
Mic's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At
Wow,
Quest
my
IRA,
brother just sent
we
me
offer retirement
on
accounts
Bring a
that can be
Trailer
used to invest
a
in
2000
real estate,
Integra Type
promissory
R,
notes,
58,000
credit
miles on it.
entities, and much more.
Current bid's already
Many of our
25 grand.
clients loan
Wow, that's a
money
sweet
from
car.
their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more
This is
information, visit our website at questira.com.
Being sold by the widow of the
or
former
call us at
original owner.
1-855
Neat car.
Fun IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
As a real estate investor, you rely on your property inspector to determine the current condition of the home and your potential return on investment. Principal Inspections was founded by investor Jeremy Humphrey to do just that. Working from the investor's point of view, Principal Inspections will give you turnkey inspections that are high quality, affordable, and focused on information pertinent to investors while not clouding the report with unnecessary details. Founder Jeremy Humphrey comes from a family of real estate investors. He started Principal Inspections for investors because as an investor himself, he experienced the need for fast, quality inspections with information directly pertaining to property condition and potential resale value. Principal Inspections will save you time and money. Call Principal Inspections, 832-684-5516. That's 832-684-5516. Or go online to principalinspections.com. That's principalinspections.com.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private
I'll tell you what,
money,
guys.
Noble Mortgage offers conventional
This is total
loans,
speculation,
FHA, and even
but I'm telling you it's going to
no-income
happen.
documentation loans for both residential
If y'all want to
and
invest in
commercial
cars,
properties.
some
Call
really
and
cool
ask for our
cars,
5-point guarantee, which
the
includes
99
free
2000
qualifications within 2
Electron
business
Blue
days.
Pearl
Call
Civic SI,
713-680-8100
Championship White,
or
Integra
visit
Type R,
noblemoney.com. That's
those cars are
noblemoney.com.
going to be
Our team has over
ridiculously
50 years
expensive
experience in the mortgage
in the next
industry.
probably
Call
10
us
years.
today,
I bet they're six-figure cars.
713-680-8100, or
Really
visit us on the
good,
web,
very low
noblemoney.com,
mileage, all original.
noblemoney.com.
They'll be $100,000 cars. And you guys, and I know people are going to laugh at that, but they
Are you
will
looking for an
be
investor-friendly
rare
contractor
cars.
for your
1
investment
minute.
property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment
Would not
properties.
shock me if
Whether it's a flip rehab
low
or a
mileage
rental
Acura
rehab, we manage
NSXs
every aspect of the rehab from start
in
to
the
finish
next
with
10
a
years
highly
start fetching
efficient,
$250,000
standardized process.
Over the last 6
I
years,
mean, their value has
Fast Track
shot
has completed
through
over
the
700
roof.
projects, which has helped us to create our
S2000s, if you guys are
success.
into Honda
Use a detailed
S2000s,
scope of work
white
so
with the
that
red
everything
interior,
gets done.
that'll be
Train
another
and
one. That'll be a
maintain
six-figure
quality
car
crews
probably
so
in
it gets done
15
right,
years.
and complete the work in a proper order so it gets done fast.
No more
It's one of the things I'm
managing
considering
yourself,
doing
no more
here over
work
the next
yourself.
year or two.
Fast Track
Once I hit
Remodeling
my
really does manage
financial
it all.
goals,
So give us a call today.
really been
at
thinking about just getting a warehouse and just start
832-742-9992.
buying some of these things, just park them.
Again, that's 832-742-9992,
Drive them every now and then, keep
or
them
reach us
maintained,
on the web at
just keep them in a climate-controlled
fasttrackremodeling.com.
warehouse. Those will easily be
This is
$100,000
Business
cars.
1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. During the break, talking a little cars, a little car collecting. Got some predictions on what cars are going to be worth a heck of a lot of money. My brother just sent me a car, Integra Type R, 58,000 original miles. Original owner had passed away. His wife is selling the car. Right now, 4 days left. It's already up to 25 grand. That will be the original Integra Type Rs. This was a 2000, but the championship white ones came out in 97 and 98, if I remember. You mark my words, those will, low mileage, all original, like mint cars, those will be $100,000 cars in the next 10 years. And everyone thinks, oh my gosh, $100,000 for a Acura, a Honda Acura Integra that sold for $22,000 new. Like, trust me, those are the cars that guys my age would pay good money for, because we couldn't afford them when we were young. That's our equivalent of the Yenko Camaro or the SS Chevelle, the SS 76 or 67 Camaro convertible. I mean, that's our era. Phenomenal cars, a blast to drive. But in any case, I digress. So if you guys want to invest in cars sometime, maybe we'll talk about that today at the happy hour at 3 o'clock in Flying Saucer. I can give you my predictions on what cars are going to be worth a heck of a lot of money in the future that you can buy now. You can buy and drive a little bit. You can't put tons of miles on them. Drive a little bit, and they'll be worth way more when you sell them. Anyways, let's talk about real estate. Let's talk about regret. My prediction for this market is it's like 2017. It is 2017, but it's like 2007 in Houston. I saw a lot of stuff as I was running around the countryside. I've looked at a lot of data across the country lately, and I like what I'm seeing. I really like what I'm seeing. Texas was really pulling the rest of the country for since about 2008. Texas has really been leading the nation in a lot of economic indicators. And then we were starting to see a resurgence in a number of markets. Silicon Valley, Denver, Seattle. There's a reason we're in Seattle. Certain parts of California, LA, other parts of the country. Now it seems like as the market has recovered, we're starting to see jobs come back. Jobs reports are looking fantastic. The number I'm really looking for right now that I'm really watching is the cost of labor. I'm looking at wages. What's going on in the labor market? And I really want to see wages starting to tighten, meaning people are starting to are going to be paid more, and that's good. It typically drives real estate prices up. So we are finally in a very upwardly mobile real estate market. That has not always been the case over the last couple of years. There were some real hot spots. Silicon Valley, Seattle was definitely a market where it was absolutely on fire. L.A. or San Diego, Houston, Dallas, Denver, and some other submarkets follow after that. But there were real little hot spots. Now we're starting to see some real resurgence in the economy. We really are. We're seeing some incredible things. It's been, the election was about a year ago? What's that rate of return on the S&P? If somebody wants to pull that up and drop it in Facebook, it's got to be close to 30%, if I'm not mistaken. How many trillions of dollars has the market gone up since Trump was elected? Now, I can certainly make the argument that some of that occurred during the Obama presidency. I don't give him any credit for it. In fact, if you look at the volatility index, that's the real interesting thing. Take a look at the CBOE volatility index and see how that's fallen since the election. Why? One of the things I think that was great about the Clinton presidency is that the president and Congress, executive and legislative branch, spent a whole lot of time fighting with each other. It was great. Newt Gingrich and Bill Clinton just going at each other on Capitol Hill. It was perfect. You know why? Because they left the rest of us alone. That's one of the reasons why Texas works so well. The legislature only meets every other year. It's a biennium. So things don't really change real fast in Texas, which is a good thing. You don't want government to change real quick. So that reduces the uncertainty. That's one of the reasons why Texas has been so great for businesses. That, and we're willing to write checks and get businesses here. So, in any case, I digress. Let's talk about regret. We're entering a really great era for single-family real estate, especially if you're a flipper or a wholesaler. Values are starting to increase, even in some of the non-traditional, really hot markets. We're seeing 5, 6, 7% growth, which is pretty cool. Meaning, if you bought a house and you're flipping and it takes 6 months to get on the market, it has probably appreciated 3, 4, 5, 6% in 6 months, 7 months. And because you will have the nicest house in the neighborhood since you've done a full rehab, you're going to push those comps a little bit higher. That's what we do in Houston. A lot of cases in the houses that we buy, when we sell a house, we don't get a copy of the appraisal. All we hear is that it makes value. Now, we may ask, hey, what it appraised for? Well, I really can't tell you that because you didn't pay for the appraisal. But we can tell you it went well above value. Which tells me that a number of our properties, a significant portion of our properties, are worth more when we sell them. In fact, what they're actually bought for is at a discount to the full retail price, which is interesting. And we see that continuing across the U.S. There's not really any markets that really have me concerned, with the exception to what I like to call international markets. Your international markets are those folks that attract international investors in droves. I know we got international people in Houston, but I mean big international investors. Here's your international markets: L.A., Miami, New York, London, Paris, Madrid. I mean, you start going down the list, right? I mean, it's all those like really big international. Every country has 1, 2, 3 of them in some cases. And real estate investing there, even in single-family real estate, it's a different animal because you're really competing with large dollars that really don't care. I mean, when it really gets down to it, they really don't care what their return is. I mean, I get deals. I got some deals from LA last week at a 0.5 cap and a 1 cap. I mean, it just doesn't make any sense to me. So in those markets, the traditional rules of supply and demand economics are really skewed because there's so much money chasing so few deals. The prices go through the roof. That's what's really going on in those markets. There's so much money chasing very few deals that it really drives the margin out of these things. Now, for the rest of us, in what I like to call flyover country, where there's some rationality to these things, it's going to be a great time to invest. The credit markets are, it seems like every quarter to every 6 months, it seems like lending gets a little more relaxed. Just a little, it gets a little bit easier to get financing, which is good, I think. I think you got to relax. The credit markets need some flexibility. So they're starting to allow more people to buy houses. I don't think that's a bad thing. I don't want 2005 to 2007 all over again, where if you could fog a mirror, you got a house. You know, if you were a landscaping guy with one crew and a stated income of $300,000 and got $1 million house, I don't think that's great. But there needs to be some elasticity, if you will, in the credit markets to allow people to buy houses. And we're starting to see that across the country. And I think we're going to continue to see that as the market, the labor market, continues to improve. People start making a little bit more money, paying down a little more debt. There's also an assumption out there that millennials are not going to buy houses.
2 minutes.
I always thought that was the absolute, single-handedly most absurd analysis I've ever heard. Millennials happen to be Americans just like anybody else. And if there's one thing Americans like, it's their own place to call home. It's been that way for 250 years. It's not going to change. Just because they were raised on smartphones doesn't mean that's going to change. The reality is they are going to buy houses. Their problem right now, sorry, I accidentally touched my phone and it started calling somebody. The problem that we have right now with the millennial generation is that they're coming out of school, coming out of baccalaureate education with a massive amount of debt. If there's any bubble out there, it's the education bubble. I mean, they're really, and I'm not talking about STEM. If you're a STEM guy, science, technology, engineering, math, quite honestly, that college education could cost you 5 times more, and it would still be a good deal. I'm talking about the liberal arts folks outside of STEM. Outside of STEM, that job environment's wild, and the amount of money people are paying for education is insane. And these millennials are leaving with all this college debt. When you fix the college debt issue, more people are going to buy houses. It has nothing to do with their preferences. They will buy houses. Trust me. We get back from the break, we're going to talk more about regret and when to get into real estate. It's Jason Bible, Right Path Real Estate.
Mike's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group group of appraisers specializing in investment.
Nobody wants to talk about investing in
We understand
cars.
that investors aren't just looking for
It's not
a number of
investing.
what
It
the
is
property is worth, but a
speculating.
comprehensive analysis of the market.
Smart
Give
speculation.
NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer
One
with
minute.
Legacy Mutual Mortgage.
Man, that last night in the
Our goal
hotel,
is
I
to give
slept
our
funny.
borrowers and referral partners an amazing
I'm just now starting to
experience
loosen up a
during the
little
loan
bit.
process. My team believes in putting people
I need to
and
start
culture
working out
before
again.
results. Our company concentrates on building those teams who operate with structure, process, and recognition for going
Hey,
the
Nikki, I
extra
didn't listen to the
mile
radio
for
show
you.
last week. Did
This
Tom
way, we
whine
have
the whole time
energy
about
to
it being
make this
cold?
your best home
He did a
purchase
couple
ever.
times.
Give us
He
a
talked
call
about
today to
him
find
wearing
out
his
the
pea
simple
coat.
steps to get
Yeah, he had a
started.
pea coat on,
I'm
a
Jennifer
sweater,
Hernandez,
then he had a
the
scarf, and I'm
Hernandez
like,
team
it's
at
only
Legacy
50
Mutual
degrees out here. He's like, I'm
Mortgage.
freezing.
Jennifer.legacymutual.com or call 713.
We were in the conference room, and I'm in like short sleeves, Phil's in short sleeves, and Tom's still got his jacket on. Like, it's 80 in here, man.
That's
NMLS
funny.
514497.
Equal housing opportunity lender.
Did you get to see your
NMLS
brother?
51449.
No, I didn't. He was. I was working the whole time. We
Oh,
were pretty busy.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/rightpathrealestate.
Hot mics.
Welcome back, Jason Bible, Right Path Real Estate. Somebody asked me, hey, Jason, what's the door hanger company you guys use? So we're putting door hangers up on houses that have been flooded by Hurricane Harvey, and we are using Virtuoso Graphics. That's the one who does our door hangers. They do a lot of our print media. They do our pop-up banners. If you guys ever go to one of our events, you'll see pop-up banners. Those are done by Virtuoso. So that's who we use. Who does all of our print stuff. Any of our marketing, like mailing pieces, that's all done through a separate company. And they do, I design the piece, or one of the guys in the office, Andy's done a couple for us. They'll design the mail piece, we'll upload it, and then that company does the fulfillment and sends stuff out. So that's who we use there. We've got a couple of companies that we do that sort of stuff with. It's all about building your team, right? One of the things that Tom talks about on Tuesdays and Thursdays is build your team Tuesdays and Thursdays. And what do you need to be successful in real estate? You got to hire a group of 10s. We talked about it last night at the free event. Fantastic event. Talked about a number of deals that we've done, pre-storm, post-storm. Talked a little about economics, shared what the weekend retreat looks like, that sort of thing. And one of the things we talk about is you've got to get a group of 10s. If you don't have a group of 10s around you, you're not going to be successful in this business. So a couple of our Right Path clients are in a company called Draco Properties. Andre King started that a couple years, about a year ago when he started working with us. And he had a picture up. You know, this is what our 10s look like. They were all at Topgolf doing, Topgolf stuff. And one of the guys who went to our first weekend retreat, we called it Class 001, which was in April of 2016, sent me a note, and he said, hey man, I just bought another house from one of your clients. And he said, and I'm having Fast Track do the rehab. And I'm using one of your lenders. It was awesome. He said, dude, the system works. It just worked. And I said, look, that I told you guys from the first class that we started, From the first radio show we did back in February 2016, our goal is to build a network of real estate investors. Really, real estate investors and partners, which are vendors and radio show sponsors. So if you want the best of the best, you don't have to go anywhere else. You just walk into our group. In fact, we just got a national lender on board. I mean, now we can lend and we can borrow and lend in 50 states. Who's got that? I don't know anybody that has that. Long-term money, short-term money, hard money. I mean, we are the only company I know that can do that. We've got rehab assets in multiple states now. And we can point you to the rehabber in your market. We can point you to the property manager in your market, in most markets. Not all 50 states, we're getting there. So the whole idea is that we're going to build a network of real estate investors. We're going to have Right Path events going on here in Houston. We're going to have Right Path real estate events going on in Seattle. And they're all going to be taught, Seattle and LA, and actually Matt down in Corpus Christi, and we're going to do it in Kansas City. We're going to do it in certain markets in Florida. We'll do it in New Jersey. New Jersey's one that's on our short list. And they're all going to be, everyone is going to be taught the same strategy, the same process. Because guess what? What works here in Houston, works in California, it works in Washington, it works in Florida, it works in New York, it works in Oklahoma, it works in Dallas, just like it does in Houston. All this stuff works. Same reasons people want to sell a house in Houston are the same reasons they want to sell a house in Tulsa. The same economic trends that are here in Houston are present in just about every other market. I mean, I would love to tell you that this business is more complicated. It's not. Now, doing it right is a little bit complicated, but you can do it. It's not hard if you follow instructions. If you don't follow instructions, this business gets real hard. I talk to a lot of real estate investors. I'll be at the Redneck Country Club next week. Is it next week or the week after? I think it's next week. For their last event of the year. And I'll run into a bunch of investors. Jason, I'm just struggling in my business. And, we talked like 3 months ago and you told me to do X, Y, and Z. And, I've really been thinking about it. I said, so you haven't done what I told you to do. No, I haven't done it. I'm like, okay, well, when you decide to be successful is the day you decide to do those 3 things I told you to do. That's simple. Oh, well, I'm just not sure. I read on this blog and I listened to this podcast and they're giving different advice. I bet they are, because they don't buy 200 houses a year, do they? Or maybe they do. Do they buy 200 houses a year? Oh, no, they don't. They buy 6. Gotcha. Do you think you have the same knowledge if you buy 6 houses a year versus 200? Because here's what I can tell you. What Apple looks like as a company when they were brand new, 5 years old, what that company knew and operated like versus what they operate like today, they don't even look the same. It's not even recognizable. So if you're getting your advice from somebody that does 10, 12, 15, 20 houses a year, and you're trying to build a business bigger than that, they can't help you. I'll never forget when my wife and I went on one of these New Year's binges to, start working out, all this stuff. This was like 15 years ago. And we signed up at this gym. And I'll never forget. It's like, second, third week of January. We're on a treadmill or some Nautilus machine or something. And this guy walks up, hey, would you be interested in personal training? This dude had to have been 100 pounds overweight. Like, you don't even believe your own advice. Like, why would I take any of your advice? Because it's pretty clear you ain't the expert in it. Or maybe you know what you're talking about, but you're certainly not motivated enough. I mean, it didn't even make any sense. I mean, how are you going to help me reach my goals if you haven't? I mean, then again, maybe his goal isn't to be slender and fit and all that other stuff. But then again, if you're a personal trainer, you kind of figured you would be, right? I mean, would you take advice on how to build wealth from a broke guy? I mean, I wouldn't. I mean, why would you do that? It's kind of like taking career advice from somebody who's never been employed. Why would you take advice from that person? I mean, you wouldn't, go to you got a brain tumor. You got to have a neurosurgeon, maybe do a little operation. I mean, you're going to ask your neighbor who's an accountant at an oil and gas firm what you should do? No. You're going to go to the best neurosurgeon you can. If your car's making a funny noise or it doesn't start, do you call your neurosurgeon to come out and fix your car? No. I mean, you talk to those who have experience and expertise in where it is you're trying to get to. That's one of the reasons why we got into real estate education. Because we're the only company that teaches the 4 ways to make money in real estate. There's only 4. There's not 50. There's not 200 ways to do a deal. There's 4. Flipping houses, wholesaling houses, being a landlord, or lending money to real estate investors. That's it. 2 of those build income. The other 2 build wealth. And if you're going to be financially successful, guess what? You need both. We're the only company that teaches that stuff. One of my regrets I have when I paid all these real estate gurus to coach me is I was never forward thinking enough to ask the question, hey, guru, I just paid a bunch of money to. Here are my goals. How are you going to help me reach those goals?
2 minutes.
When we sit down with somebody at the weekend retreat, before anybody writes us a check, first question we have is, hey, man, what are you trying to accomplish? You and your wife, what are y'all trying to do here? We might not even be a good fit. In fact, real estate may not even be a good fit. And you know what? I'd rather have that conversation with you before you spend all this money and time trying to figure out it's not for you. But let's have a conversation first. What are you trying to accomplish? There may be an easier way to do it, and or real estate may not be the fit. Or if real estate is the fit, the things you believe about real estate are not true. I find that a lot. I find that to be true most of the time. Give you a great example. Was up in Seattle. We had a small networking event. And by small, I mean we sent out an email an hour and a half before the event. We had 10 or 15 people show up. And we went around the table, and we asked everybody, what are you trying to do in real estate? And the answers were fascinating because most of the people in the room were doing things in their real estate business that were in 180 degrees opposite of what they should be doing to meet their goals. In other words, they were going in the absolute wrong direction. We get back from the break, I'm going to talk about what those issues were and how we help fix them. It's Jason Bible, Right Path Real Estate.
Mic's off.
As a real estate investor, you rely on your property inspector to determine the current condition of the home and your potential return on investment from an investor's point of view. Principal Inspections was founded by investor Jeremy Humphrey to do just that. Principal Inspections works from the investor's point of view, providing affordable, fast, quality inspections with information pertinent to investors while not clouding the report with unnecessary details. Principal Inspections will save you time and money. Call Principal Inspections 832-684-5516 or online at principalinspections.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Rehab loans, conventional loans, FHA, and no-income documentation loans can seem scary unless you have the right mortgage company to guide you through the process. Since 2003, Noble Mortgage has been helping investors just like you. Whether rehabbing houses, buying your first home, rental, or commercial property, Noble Mortgage offers up to 100% financing. Call Noble Mortgage at 713-680-8100 or visit noblemoney.com. That's noblemoney.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
You found or inherited a great investment property. Problem is, you don't know how much it's worth or, more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement
30
plans?
seconds.
Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mics.
Welcome back. Welcome back. Jason Bible, Right Path Real Estate. We're talking a little bit about my trip to Seattle with chatting with a couple of real estate investors at this networking event. One of the fascinating things is I like to call it the graduate school of real estate. And that is people get sold on this plan that they want rental properties, but the only way to get rental properties is they have to build up capital. I hear this all the time. You get, Jason, I gotta build up my capital. I gotta build up capital. I don't have enough capital. I gotta build it up. Only in real estate do I hear this. No other business do I hear anybody say build up capital. You know why? They just go get other investors. Hey, I got the great idea. You guys got the money, right? Come bring the money. Let's do it. They don't go, oh, I need to do a little smaller business and then build up my capital. So a lot of times I hear folks who want to get into buy and hold real estate as a passive means for investing. Now, I'm going to use the term passive because that's what the industry uses. Rental properties are not 100% passive. It's not like buying a stock or a bond. There is a little work involved, but they are relatively passive compared to your W-2 job, right? So they'll say, I got to work on my capital. So I can do rental properties. I saw a note yesterday from Daryl over at Noble Mortgage. They're doing rate and term refis. Now, there's certain conditions that apply here, but they're doing rate and term refis at 85% ARV, meaning the bank will give you 85% of the deal. If you have a 15% equity position, meaning there's at least 15% equity in the property after you've bought it, closed on it, rehabbed it, all that stuff, you will have no money out of pocket, meaning the bank will give you 100% financing. If you want to build a rental portfolio,
2 minutes.
There is no reason, zero reason, for you to have to, quote, build up capital. There's no reason to build up capital. It's a lie. If someone is telling you, and that's what I found out with these people, there's a real estate education club they're involved in, and they said, in order to get into the passive income, you have to build up capital first, and we'll go find you some properties that'll be good landlord deals. And I'm like, you don't have to do that. Who told you that? And then they told me, I said, that's because they're trying to sell you this passive income thing. Like, you don't have to do that. You can buy rental properties right in your backyard. They said, really? We don't have to flip and wholesale? No, you don't. We got all the money to do it. You just got to all you got to do is get the property at a 15% discount, which if you're buying distressed houses is totally doable.
1 minute.
Buy a house that needs some work. You get 15, 20% off pretty quick. And you'll have no money in the deal. But then again, they're going to somebody who's got something else to sell them. So they're not going to tell them that part of the equation. It's kind of unethical, at least that's what I think. If y'all want to learn more about this kind of stuff, this kind of investing, where we've got equity and cash flow, and that's how we build wealth,
seconds.
Go to rightpathrealestate.com. We got a weekend retreat coming up Friday from today, a week from today.
20 seconds.
We teach you the ins and outs of this business. We answer all your questions. It's a great event. It's a couple $100. In fact, if you're not satisfied by Friday afternoon, just come find me or Tom. I'll write you a refund check right there.
10 seconds.
No risk for the event. Money back guarantee Friday. I'll write you a check. You'll be out the door and have the rest of your weekend. So I'd love to see you guys at the next weekend retreat. Thanks for listening to the show. I'll be on Monday, bright-eyed, bushy-tailed, 9 a.m. Thanks for listening. Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
Great. Thank you, ma'am.
You're welcome. Bye.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at Right Path Real Estate.